Hey, it's Bill Soriano again from Pittsburgh, and I just watched that first live that I did about 30 minutes ago, and it really didn't sound very good. It wasn't very good at all, so sorry about that. I just wanted to come back here and show you this a little bit better, the New York City reversals, and I wanted to show you this little document here. I have some rules here laid out for the New York City reversals. You want to look to take trades between 8 a.m. and 11 a.m. Definitely don't take any trades after noon. Now, if you're already in the trade, you stay in it, but you don't want to take any trade if you're not in it already after noon. You want to see 3 clear intraday pushes. Okay, so if it's making its move up, you want to see 3 clear pushes up. And I'll show you an example of that. Or if it made the move down, you want to see 3 clear pushes down. Then you want to make sure that the average daily range, and I have on my charts the 14-day average daily range, you want to make sure that that has been met or exceeded. Then you want to look for a W at the bottom, an M at the top, or railroad tracks. Now, I'm not telling you to trade every W and every M that you see. You'll get run over in the market. You're looking for these at specific places during the intraday move. Okay, so you're looking for a W at the bottom and M at the top. I'll show you that as well. The second leg of the M or the W should come within 3 pips of the first leg. I'll show you what I mean by that. You want to enter your trade after the close of the candle that forms the second leg of the M or W. You want to set a stop loss 13 pips above or below the high of the first or second leg of the M or W, whichever is greater. Okay, and you want to take your trade. Once you're in your trade, you want to take that trade. You want to set your take profit at the water. The water is the 50-day moving average or the 50-period moving average, because it's different depending on the chart that you're using. It's a 50 moving average. I'm using a 15-minute chart. So it's a 50-period moving average, and I'll show you where that's at here on the chart that I have up here. And so you want to take that back to the water, or you want to look for a max of 35 to 50 pips. So it's 35 pips in the currencies that have an average daily range, a lower one of like 100 pips or less, and it's 50 pips on the ones that have a higher average daily range, like the pound pairs, 100 pips or more as an average daily range. But in any case, you go back to the water, but it's a max of 35 to 50 pips. If back to the water is only 25 pips, then that's what you shoot for, back to the water. Now, sometimes, about 30% of the time, maybe even 40% of the times, it will move all the way back to the 200-period moving average, but it doesn't always do that. So let's look at, so these are the rules here for the New York City reversal trades. So let's look now at this chart again of GBP NZD for today. It's a 15-minute chart, and we see here it made a big move down. Okay, so we're looking to take the reversal, right? The New York City reversal. So when you're looking at this here, you want to see 3 clear pushes down. So a push is a move down and a consolidation, right? There's 1. There's 2. There's 3. So you have 3 clear pushes down. You have 3 right in this area right here, right at this dotted line, which is actually yesterday's low. Okay, it's a pretty good indication that it could reverse there, but again, right here, I don't know if you could see this, the average daily range for GBP NZD is 151 pips. So if we measure from here to here, we only have 132 pips. So we don't want to look for an M or a W there because it hasn't dropped far enough. Okay, we don't get to 150, 51 plus pips until this area right in here. Okay, now when you're going to look for the M or W, okay, you're going to look at this area right here. So that it comes down to here, it pulls back up, right, and then it makes a move back down. That's the second leg of the W right there. Okay, now in this case right here, you have railroad tracks or quasi-railroad tracks. So you can actually take that trade because of the railroad tracks. Railroad tracks are just M's and W's on a shorter time frame. So you could take that trade right here. The problem with taking trades off of the railroad tracks is that you're going to risk more most of the time, because the second candle of the railroad track moves in the direction that you want to go. So in this case here, you would get in this trade right here, okay, and you're already 15 pips from the bottom, right? So if you add another 13 pips for the stop, now you're risking 28 pips on that trade, okay? It's good to find trades where you risk 20 pips or less, because you can do a larger lot size if you're risking less pips, okay? But again, it's up to you if you want to take these trades. Now in this case here, it does pull back down to give you a second leg of that W, and now you can enter the trade down here on this candle. So what happens is now you're less than 3 pips away from the bottom, so your total risk on this trade would be just 16 pips. So you can increase your lot size to make more money. Okay, so if you get in down here, right, you could get in here and take some heat, right? You wouldn't get stopped out, right? Or you can get in here and you really don't take any heat. You get in on this candle, right here. It does drop a little bit, but then it moves back to the water. And on this one here, you would get 38 pips less your spread. Now, if you see here, it does pull back, and then it actually goes higher and moves up to the 200 period moving average, which is white here. We call that the Mayo. Okay, this aqua line here is the water. That's the 50-day moving average. Okay, so that's where you want to take the trade back to. Okay, so if you look at that, if you look at the rules there, you're trading between 8 and 11, no trades after 12. 8 and 11 is best, but you can extend that for another hour until 12. After 12, though, you probably shouldn't take a new trade. 3 clear intraday pushes, ADR met or exceeded, W at the bottom, right, or railroad tracks, which we've seen here both in that scenario. Second leg of M or W comes within 3 pips of the first leg. We've seen that. We enter a trade after the close of the candle that forms the second leg of the M or W, or the second candle of the railroad track, right? And we set our stop loss 13 pips above or below the high or the low of the first or second leg of the M or W, whichever is greater. Take the trade back to the water. So that was a pretty good trade there, and that would have been a good one to take. Now, another one that you may have taken was EURNZD. Okay, again, we're going to look here. This is the move it made, right, coming out of the Asian session. We have 1, 2, 3 clear pushes down right in this area right here. And again, it's down close to that dotted line, which is yesterday's low. Average daily range is 111. Don't know if you can see that, but it's right here on my chart. If you measure down here, that's only 80 pips. So it hasn't dropped low enough. You don't want to look for an MW or railroad track here. Comes down here. You get a nice pin to the bottom, which is a nice reversal candle here. And it's dropped 115 pips. So now you're looking for that second leg of this W. And you want that second leg to ideally come within 3, I would say 3.5 pips tops, right, of this first leg. So this low right here that's set by this candlestick pin right here, you want the next one to come within during the 15 minutes of that candle. It doesn't have to close there, but you want to see it. You'd like to see it come within 3 pips. So right here, these ones right here close about 5.5 up. This one right here, though, is right about 3.5 to 4 pips. Okay, so it's questionable. It's kind of right on that border. You'd like to see it come within 3 pips, but again, 4 pips isn't that bad. So that's where you get the second leg, right? That's the second leg of your W. So when this candle would close, okay, you would take your trade at the open of this candle here. Okay, you would take your trade. You don't take much heat, and you take it right back up to the water, 35 pips, right? You would set your stop right below there, so you'd get out 35 pips less your spread. Okay? Again, it does pull back, and it goes way higher, but it doesn't always do that. Okay? So again, it's up to you if you want to try to get those additional pips, but I like to get out at the water here. So that was another trade that was pretty good, and I think I had one more here, if I'm not mistaken. Okay, this trade here was USD CAD. So this one, again, this is an example of a trade that you probably wouldn't want to take. First of all, if you're looking at the move down here, it only really makes two big moves down, right? There's 1, 2. You don't have those 3 clear pushes, okay? You get a big pin to the bottom here. Average daily range is 97 pips on this. So if you go down to the bottom, that's 132 pips. Okay, so it definitely met or exceeded the average daily range, but you didn't really have those 3 clear pushes down. You only had 2. Now, when it comes back up here, by the way, this you want to call this a hammer candle here. This is a big reversal candle right here. If I would have gotten this candle right here at the open of the New York session, 9:30 a.m. to 9:45, or maybe the candle right after it, I would probably take that trade immediately. But again, the problem here is your risk, okay? If you would take that trade right here, you're already 24 pips away from the bottom at another 13, so you have to risk 37 pips on that trade. So you have to lower your lot size so you don't risk more than 3% of your account size on any trade, right? Now, just doing the normal thing, looking for the W here, we want this to come within 3 pips, right? 4 at the most, guys. We've seen 4 in the last trade, okay? This is 12 pips away. So that doesn't come within 3 pips. So I wouldn't take this trade. So this is an example of a trade I wouldn't take, even though it does appear that you could have made money getting back to the water right here, or in this case the Mayo, since it's under the water, which doesn't usually happen on these types of trades, or if we wait for the pullback and it moves all the way up to here. So I hope that helped you. I gave you a couple examples there of trades that would have been good for today, and also one example of a trade that I wouldn't have taken based on the rules, even though it did work out that it would have been a profitable trade. So again, on the New York City reversals, we are looking to take trades between 8 and 11, but we can go to 12, nothing after 12. You need 3 clear intraday pushes, ADR met or exceeded, looking for that W at the bottom, M at the top, or the railroad tracks. Second leg of M or W should come within 3 pips of the first leg. We enter the trade after the close of the candle forms the second leg of the M or W. Set stop loss 13 pips above or below the higher of the first or second leg of the M or W, whichever is greater. And take trade back to the water, max 35, 50 pips. So I'm going to copy this here, and I'll put this under this live here so that you guys can see that if you're looking for it later on. I'll put that in the description area of the live. So again, Bill Soriano from Pittsburgh, and hopefully this was a much better video to show you a little bit more exactly what I'm looking for during the New York City reversals. And until tomorrow, let's make it a great day trading Forex.